Sure.
Welcome to another episode of Phillip Trading Podcast. So my name is William here, and today we have David, a full-time proprietary trader with IcebergX Sdn Bhd. Okay, so today he will be giving us a quick preview on his webinars on 24th of June 2021, where he will discuss trading setups and also opportunities for the rubber futures market. So for those that are very interested and keen to learn more, feel free to join our webinars on capturing opportunities in the rubber market. Okay, you may find the registrations link in our website. So David, how are you?
Yeah, I'm good, William. Thanks for asking.
Yeah. Okay. Good to hear that. So yeah, I will pass the section to you to share a little bit about the rubber market.
Yeah. Okay. Sure. Thanks, William. Yeah. So I think with a lot of commodities in play right now, and the possible talks of, we are in a super cycle and whatnot. So I think there's always one product that's always being missed and less mentioned. That is the rubber market. So being in Malaysia, we are very well familiar with CPO, the palm oil market in Bursa. Then obviously when it comes to rubber market, there's less knowledge about it and less awareness about it. Rubber being as any other commodities as well. You look at palm oil, or even you look at crude oil, for example. It reacts to sentiments, it reacts to news, and obviously there's specific fundamentals, overview fundamentals that it does affect the prices of rubber in the global market. So I think it's a very good opportunity, and thank you, Phillip Futures, for organizing this upcoming rubber webinar. And hopefully this session will be will be beneficial to the audience, especially those who are new to the rubber market. So in today's very short podcast session, I'm just going to touch what I'm going to be speaking mainly about in this upcoming webinar. So as usual, just a risk disclaimer, I think any presentation materials was purely basically on educational purpose. There'll be definitely strictly no recommendations. So do consult with your own financial advisors for further knowledge into the product. So now, rubber is a very key product. Being like palm oil is a very, it's an edible oil market. You obviously use as a cooking oil and whatnot. So rubber is also a very essential product. We use it on our living necessity as well. So obviously, if you look at it, right now, obviously the theme is rubber gloves. So rubber is being used in the glove sector as well. But if you look at it in the rubber market perspective, 75% of the total consumption in the rubber market is actually in the tire space. So look at it, vehicle sales is an important parameter for us to gauge where the rubber market demand is going to go. So obviously, rubber has a lot of usefulness besides being used as a major product in the tire market. It also used in medical gloves, in contraceptives, even some of your house materials. You still use rubber as a waterproofing or even as a sealant. So rubber is a very major commodity that we use it on everyday basis, but we wouldn't know. So I just put a picture here of the rubber duck. This is a very large rubber duck. You can actually check it on Google. It was in the Hong Kong pier for quite some time. So it goes to show that I think rubber plays an important role, especially in our everyday lives. Now, just to share a little bit on characteristics of rubber. So we are very well familiar with oil palm. Oil palm will start to produce probably on the 4th year onwards. It has a cycle of 25 years. So same goes as rubber. Both rubber and oil palm are very huge investments. The moment you plant is almost like a 30 to 40 years investment. So rubber will start to produce latex probably on the 7th year onwards. And it goes on a cycle for 30 to 35 years. So it's actually very similar to oil palm. Now, in terms of crop management, if you're someone in the field, if you're probably in the industry, you know that rubber trees are actually better managed compared to oil palm. It's easier to manage. But obviously for the rubber tapper is a bit difficult. So because rubber tapper literally has to go out early in the morning, during before the sun is up, to collect latex, because once the temperature gets higher during the day, your rubber can get coagulated very quickly. So rubber trees is usually mainly grows in tropical climate like Malaysia. And obviously, you want to know where rubber trees are planted around the world. Just take the equator line. You just go up north, probably 6 to 7 degrees, and down south 6 to 7 degrees. So countries like Cambodia, like Thailand, like Indonesia, These are all the major producing countries. Now Thailand is pretty much leading the race in terms of the major rubber producer in the world. So I think that's how we see rubber. And one important process about processing rubber is that we call this process called vulcanization, which basically adding sulfur into the latex to make your rubber even more elastic, or rather in physical properties is called higher tensile force. So it actually enhances the quality of the rubber. So it's a very important process, as we go through the rubber process. Now, just to give an overview of the price performance for rubber. Now, generally when we talk about rubber, we always look into the XGX SciComm TSR20 prices, because the TSR20 contracts actually is what we call the global benchmark pricing for rubber. Same goes for when you look into palm oil price, you always look into the Bursa Malaysia derivative CPO market for the global benchmark pricing. So same goes for rubber. We always refer to the XGX SciComm TSR20 as the benchmark. So just to give an overview of past 2 years prices, we can clearly see that we went over from 100 cents to right now we are probably touching about 150. That's about $1,500 US dollar per ton. By the way, this contract is quoted in cents per kg. So when you convert to tons, you probably just times 10. So obviously you look at, I don't have here with me the 10-year cycle, but what you can see that, rubber, from the peak of about 5,000 or 500 cents per kg, it went all the way down to close to about 100 US cents. So right now doing about 150. If you notice from last year where we have started from the onset of the pandemic, we have seen prices collapse to almost to 100 cents. That's way below our cost of production. And eventually prices starts to pick up. Now, if you look at it, the price trend, this is pretty much in line with the global recovery. We have seen China starting to recover probably about May or June last year, because they were the first one to enter into the pandemic and they're the first one to get out of the pandemic. So along with that, rubber prices also eventually inch higher. And obviously last year, I think early part of this year and later part of last year, we have seen weather issues across Thailand, which is the major producing country. So that actually caused rubber to increase higher as well. So there's a couple of factors that actually drive prices, but just to give an overview, we are right now in a very good price trajectory. Now we are way above the 100 cents level. But I think prices has been consolidating this level because they are really looking to China being the price leader or price driver in this commodity. Now, this just to sum up some of the factors that actually affect rubber prices. So obviously, with any other commodities, like even you look at grains or even you look at BMD CPO, weather conditions are very vital. So if you have bad weather conditions, then definitely it's going to be bad for rubber as well, especially during monsoon season when rubber tapper find it a bit hard to go down to the field. You can see supply start to shrink. So weather conditions are very important. And like I said just now, 75% is in global tire makers. So global automobile sales is very important. So as long as you see gradual recovery in economy, that means automobile sales will start to recover, and that will definitely support rubber prices. And China. Now, the reason I mentioned China a couple of times because China is a very big consumer of rubber, especially the tire rubbers. So China rubber import figures are something to watch out if you are in this market, because it does give you the picture of where China demand is. And obviously related market prices. So I think later on I'm just going to share with you, along with other commodities, rubber is also part of the commodity basket. It also does follow quite a close relationship between crude oil or even to a certain extent like CPO, for the matter in fact. So related markets does have an impact to a certain extent. Now, oil prices and dollar strength is something that is also another important parameter to watch out, because whenever we have high oil prices, when you're in the medical growth, a lot of people are now demanding synthetic rubber. Synthetic rubber is basically derived from, to a certain extent, from petrol. So whenever we have high petrol prices, it's going to affect synthetic rubber prices. It's going to make it more expensive. So natural rubber in a certain way is going to look more promising. That's where demand is going to be increasing, and it's going to support prices as well. So it does have a relationship between oil prices, and obviously dollar strength is plays into all commodities. So in this case, rubber is TSR20 rubber is quoted in US dollar. So dollar impact will definitely have an impact in this commodity as well. So government policies, as usual, tax policy, tax regime, this will have an impact on prices going forward. So just to show you, here I have a chart. You look at it, rubber prices TSR20 highlighted by the blue line, and the orange line is your BMD FCPO. Then the black line is obviously the commodity index, the DXY Thomson Reuters. So it goes to show that rubber prices does follow along with other commodities as well. As long as the commodity basket starts to increase, rubber in indirect sense will also start to feel the spillover effect. So obviously, of late, we have seen commodity prices starts to moderate. Given that China is actually very persistent of controlling prices in commodity prices in China. So I think a lot of commodities are starting to probably off its peak and start to head lower. So same goes for rubber. We have seen from 160 cents right down to 150 right now. So I think that's also spelling a bit of effect on the rubber market. Now, production, I think I'm just going to skim very briefly. So again, Thailand is a very big producer. I think they probably produce on annually basis between 4.5 to 4.9 million tons, followed by Indonesia. Indonesia is the next largest producer after Thailand. So Indonesia has a very mixed profile. Obviously, the concentration is in palm oil. But I think last couple of years when rubber prices was still attractive, they have actually planted a lot of rubber trees. So I think their production is actually coming quite on stream. So Thailand and Indonesia both pretty much consist, close to 60% or 65% of the total global production of rubber. Now, car sales is important. So if you look at the US car sales and you point it back and you overlay it back into the rubber price trend, you can clearly see that the rubber prices starts to increase whenever US car sales starts to pick up. Now imagine that I think last month's figures, the US second-hand car sales has actually jumped because car producers just don't have enough chips to produce. So they literally had to go to the second market. As economy starts to reopen, that's what we're seeing right now in most of the developed countries. Definitely there'll be more demand for mobility, more demand for vehicles. So in direct sense, there'll be definitely more demand for rubber tires. So I think these are the factors that's actually contributing to the recent rise in rubber prices. Now, obviously, in the upcoming webinar, I'll also be touching a little bit on technical side of things. So, if you are new to the rubber market, it's a quite an interesting market for you to trade. In a sense that it's actually quite trendy, but to a certain extent, at a certain point in time, at a certain period of time, the market can be quite range. So if you are looking at a range trading type of setups, it's pretty much a good market to trade. Now, what I have here is a chart that's being overlaid by a GMMA indicator, which is a group of different two categories of moving averages. GMMA is also known as GAPI. So you can clearly see that once the long-term and the short-term moving averages starts to consolidate, that shows that the market is actually on a sideways market. And that's where you tend to always use or employ sideways trading strategies. So right now we're seeing the market right now in the rubber market is on a sideways trend, and obviously the 150 is a very crucial support level. It breaks that, then likely we're going to see prices will start to retrace to 140 to even 130. So I think I'm going to explain more of this using GMMA trend indicator in my upcoming webinars. And I think just to probably end the preview session here, I'm just going to touch a little bit on the SGX SICOM TSR20 contract. So it's 5 metric tons, it's 12 months in terms of the contract specs. The trading hours are very similar to, it's very friendly to Asian hours. It starts at 7:55 a.m. to 6 p.m. Malaysia time. And obviously the quotation is in US cents per kg. So every 0.1 cents change, your minimum fluctuation, you're looking at about $5 in terms of value. Obviously, this contract is physical delivered, and the loading bays are pretty much around the key major producing countries, including Malaysia, including Cambodia, and the rest of other producing countries as well. So with that, I'm just going to leave it here. And I looking forward to see those who are interested in this market for the upcoming webinar. And before I end, I think just to emphasize, we are right now in a very good opportunity in the market, whereby we are seeing a lot of volatility in the market. That will translate a lot of trading opportunities. Okay, I will hand it over to you, William.
Okay, thank you very much for the preview, David. So once again, if you are interested to find out how you can participate to trade the rubber futures under the Singapore Exchange, feel free to drop us a message via our Facebook, and our representative contact you the soonest possible. Okay, so thank you all, and see you all next time probably. Okay, thank you, David.
Thank you.
Bye bye.